Welcome to Halloween 2023. Scott Riley with the Market Update Desk, Mortgage One. Here we go. Here's what's going on today. We've talked about yesterday. This is going to be a super busy week. So we've got some tricks and treats out there happening in the economy and reports. Let's dive into them and start to go through them. So, helping the bond market today was a weaker than expected October CPI out of Europe, with the headline inflation figure up 2.9% year over year, which was 2/10 less than the forecasted and down from 4.3% back in September. Helping the decline was actually an 11% drop in utilities, energy prices. So that was a welcome sight. The core rate was also unexpectedly lower. It was up 4.2% versus 4.5%. So some of that European activity is going to start to trickle through, hopefully, to our reports. Additionally, some of the GDP figures out of Europe were negative. So we're seeing a slowdown in the European economy. Last night, the quarterly Treasury refunding figure was announced for the U.S., and we only needed $776 billion. Now, that was against what was expected, $852 billion. So we're seeing a little bit less of supply, which is a welcome sight in the market. The good thing for this was very good for the bond market. Here's a little bit of factoid for everybody here. How would you like to make a $1 trillion bad judgment? That's what happened with Secretary Yellen. So she's come under a lot of criticism from individuals that are highly trained economists like Stanley Druckenmiller, who accused Yellen of making the biggest blunder since Alexander Hamilton back when the U.S. started their 10-year Treasury. So back when the U.S. Treasury was at 0.5%, she chose to issue short-term debt to save a little bit of money, but she had the chance to lock in long-term 10-year rates when the rates on the 10-year were very, very small. With the shorter-term yields now above 5%, it's estimated that error or bad judgment call is going to cost taxpayers around $1 trillion. Most households, I did, change debt, house, cars, whatever, back in 21, 22, when rates were very low, into fixed rate debt. The U.S., unfortunately, under Yellen's leadership, did not. So that's a huge blunder, unfortunately, on her part and the government part. Bank of Japan, we talked about a little bit yesterday with their yield curve control. They did raise their inflation forecasts and are keeping negative interest rate policies in place. So there's a whole lot going on with Japan and the amount of debt that they're going to need to issue coming up very shortly, which is more competition for our bond market. So some very good news. Case-Shiller Home Index, which is basically the gold standard for appreciation data, showed that home prices or values rose 0.9% in August, which was more than expected. Now we are on pace for a year-over-year increase of home appreciation based on Case-Shiller of a little over 6%. Remember all those people that were talking about a decline? Oh, if rates go up, home values have to come down. No, that's a feeling versus data. The data shows that is not correct. FHFA, Federal Housing Finance Agency, also put out their report. Now, keep in mind, this only goes up to the Fannie Mae, Freddie Mac insured levels and doesn't include any jumbo transactions, which is what Case-Shiller does. FHFA reported that home prices rose 0.6% also and are now up 5.6% year over year. Continued data that is showing the value and the positive investment of real estate. Apartment lists rental data came out and showed October rental report fell 0.7% during the month and is now still down minus 1.2% year over year. So we're seeing some relief on the rental cost as far as the growth of it. This is the third consecutive month we're seeing negative rate growth, and the declines are likely going to probably persist into the winter months. As far as the market right now, we're waiting on the Fed decision tomorrow, the bond auction later this afternoon, and then when we hit Thursday, we're going to get jobless claims. And then Friday, we're going to get the BLS jobs number. Also, tomorrow, we're going to get ADP. So we are trending in the right direction. We're up 6 or 7, 8 basis points in mortgage-backed securities, down 2 basis points on the 10-year Treasury. Those are good signs. Once again, as I've talked, I would much rather see slow, consistent improvements rather than the violent ups and downs. Now, in the stock market, all 3 indexes are a little bit mixed right now. Everybody's waiting on this data to come out. And it's not so much what the Fed is going to put in place. All signs are pointing to a pause in the Fed funds rate, but there is going to be significant weight put on what the commentary is going to be. Let's hope that Chairman Powell comes out with a muted or a little bit of a dovish tone. Even an even tone would help us out. Just not the hawkish harping on 2% goal. We have been on a sustained improvement on inflation. Let's see if we can keep that going. Give us a call with any questions. Do us a favor. Follow us on YouTube, Instagram, and follow this page on Facebook if you could. That way we can increase the amount of people we're getting this to. Hope all is having a great day. Have a safe and wonderful Halloween night, everybody. Take care.